All right. Yeah, welcome to this video today, which I'm going to explain top-down analysis for you guys. Okay, so let's dive into our chart and see. All right, I'm already in the trading view. As you can see, I'm already in the trading view. Okay, good. For top-down analysis, what do we actually mean by top-down analysis? We actually means analyzing the chart from the higher time frame down to the lower time frame, right? Why are we analyzing the chart from the higher time frame down to the lower time frame? To get a good and clear confirmation of the market, to know the actual direction of the market, and to know which time to enter the market. So that is what we call top-down analysis. As you can see, this is our chart, right? And follow up to all our time frames. We have different time frames here. As you can see, we have the ranges. We have the 12 months, 6 months, 3 months, 1 month, 1 week, 1 day, 4 hours, 3 hours, and so on and so forth. You all know that in the chart, right? So we have all these time frames. But what should be our focus point on all these time frames? That's what we are going to discuss today. So as you all know, there are different kinds of traders. As you can see in my screen, I have a scalping trader here written in my screen. I have a day trader and I have a swing trader, right? So we are going to explain each and every one of them so that you guys will understand which kind of trader are you, or which type of trader are you willing to be, right? As you can see now, let's start from the scalping trader. Who are the scalpers? Scalpers are those traders that trade that's analyze the market in just that take their entry in smaller time frame. That's, I believe all of you watching this video now, you already know what time frame actually means, right? We just want to discuss on top-down analysis, and top-down analysis goes with different kinds of traders. These three traders here you are seeing my screen: scalping trader, day trader, and swing trader. All of them have their own specific time frame they use in trading the forex market. So that's why we are going to discuss their time frame so that you go and sit and see and backtest it. Which one are you perfect on, or which one do you makes you understand the chart more clearly? So as you can see now, in scalping trader, we want to start discussing about scalping trader. Who are scalpers? Scalpers are those traders that enter the market and go out with the market within a short period of time. They do not even spend more than 30 minutes to 1 hour in a particular chart. That's scalpers. When we talk about day trader, who are those day trader? Day trader are traders that can hold trade for almost a day, hours a day. They can hold trade for hours, 4, 5, 6, 7, even a day. That's day trader. Then who are swing traders? Swing traders are traders that can hold market for almost what could I call it, for almost a very long time. 1 week, 2 week, a month, even a year. It depends on between the swing, which type of swing are you perfect on. There are some swing traders that hold trades for over a month. Some hold for some weeks. So that's swing trader. So let's discuss about scalpers. Scalpers, if they want to do top-down analysis, where do they start? Their more insight is in the 1 hour. As you can see, this is the 1 hour time frame. Let's click on the 1 hour time frame. This is BTC. This is BTC. So let's click on the 1 hour time frame and see. As you can see in BTC, what is happening in BTC? The market is going up. Sorry, let me adjust this. Let me adjust it up so that we won't get distracted. As you can see in BTC, the market is going up, right? The market is going up. So what do we understand? Based on, we know what is trend, we know the uptrend and we know the downtrend, right? So we always trade the market based on the trend. We don't trade against the trend. Now this market is going up, we won't say let's sell because we are we are expecting market to sell, right? So what we are expecting here is buy. Let's get a buy confirmation and take the buy here. As you can see, we are already in 1 hour time frame, as you guys can see all here. So the market is going buy, is going up, so we will look for opportunity to buy. As you can see, based on what I can see here, there is an opportunity here for us to buy. There is no confluence here, that we have a fair value gap and an order block located in this area here, right? So let's move to, okay, in the 1 hour time frame, this is trying to tell us that this market is going to drop here and move all the way up. We all know that there is a retracement in forex, so this is trying to tell us that this market is going to drop all the way here and move up. And we all know that there is a zone here, rejection zones here. As you can see, this is also giving us a confirmation that this fair value gap might be respected, or the order block. So moving to the 15-minute time frame, that's what day traders and scalper traders do, from the 1 hour time frame to the 15-minute time frame. Moving to the 15-minute time frame, what are we able to see here? Let's zoom. In the 15-minute time frame, there is an order fair value gap here. As you can see, the fair value gap has been mitigated, so it's not a point of interest. But that same area we marked in the 1 hour, we still have fair value gap in that same area in the 15-minute time frame, right? So what are we going to do? Let's move to the 5-minute time frame and see. Let's move to the 5-minute time frame. You see, still in the 5-minute time frame, we also have, but that fair value gap has been mitigated, right? That fair value gap has been mitigated, but the 5 minutes is telling us that there is a liquidity in this area. Let's mark it out here. The 5 minutes is telling us that there is a liquidity in this area here. So now we know that there is a liquidity in this area here. So that means market is going to respect the order block instead of the fair value gap. So let's go back to the 1 hour. Marked out our order block, since the 5 minutes has already mitigates the fair value gap there. So let's mark out our order block, because our order block is carrying a liquidity there. And if you do not forget, there is a former fair value gap here, that's this order block, this order block respected. So I guess, or what I'm seeing here is market is going to take out this liquidity, and there is an order block there. An order block will never be valid if there is no fair value gap on it or a liquidity on it. As you can see, this is a liquidity zone here together with our 1 hour fair value gap, 1 hour order block. So we move down to 5 minutes, right? What are we hoping? We are hoping market to drop, maybe sweep our liquidity, then push all the way up. So what are we going to do? As a scalper, we are going to wait for this market to come back to our entry point. Don't forget, a trader always waits. A good trader always waits for the markets to come to him before he take the trade, not taking the trade without the market coming to him, right? As you can see, we have to wait for this market to sweep our liquidity here before we then do what? Move to the 1 minute time frame. If this market come to sweep our liquidity here, we move to the 1 minute time frame. After the market has dropped, right, we move to the 1 minute time frame and check for our point of interest there. That's our institutional reference point. What are institutional reference points? It means area of concentration. We might see a change of character in the 1 minute time frame, that shift in market structure. We might see Yes, that's what we are even hoping to see after the market sweep this liquidity here or respected the order block. It might not sweep the liquidity, but it might respect this 1 hour order block here. When the market reaches there, we are going to wait for change of character, right? That shift in market structure. Then we take the buy. If we are taking the buy, we'll take our profits around this area here. We are not going to hold so long. This liquidity area here, as you can see, that area is not taken already, so we'll scalp, hold our trade from here to here or anywhere. If the shifting structure happens here, we'll take our trade somewhere else like this. So this is all for scalping. This is how scalpers scalp the forex market. So I guess you guys understand scalping very well. So see you in my next video. I'm going to explain the day trading and the swing trading. Thank you for watching. Follow, like and subscribe.